one of the few pledges that the Labour government has made in relation to taxation that they would implement, they say, if elected, is to radically change the rules on the taxation of non-domiciliaries in the UK. And by that, I think they mean the remittance basis of taxation, basically the basis of taxation, which says that if you are subject to a number of conditions that I'll just remind you of in a minute, says that if you are non-domiciled but resident in the UK, you only have to pay tax on the income and gains that are generated abroad, not in the UK, that are brought to the UK, remitted to the UK. And there's a fairly extensive set of provisions which determine what constitutes a remittance, which I won't cover in this short video. It will seem like a long video, but it's actually quite short. So what could the Labour government do? They say if they got rid of these rules or dramatically reduce them, they could generate, in their opinion, their estimation, £6 billion of extra tax revenue a year, which they could use towards public services to enhance, improve public services. So as a reminder, the remittance basis, which I've just mentioned, so probably don't need to remind you of, but the remittance basis of taxation means that you only pay tax on gains and income that are generated abroad, the tax and income that you gains and income that you bring back to the UK, you remit back to the UK. So, okay, when does that apply? When you are, in principle, when you are non-domiciled but resident here. Oh, okay, good news. Do you have to do anything to get it? No. If the total gains and income are less than £2,000, you don't have to do anything to get it. And the two key prices you have to pay for having the remittance basis, which is losing your personal allowance and using your CGT exemption, did not apply to you. So you get the benefit of the remittance basis of taxation, provided your income and gains in total in the year are less than £2,000, without paying the price of losing your personal allowance and your CGT exemption. Okay, but what if the gains and income that are unremitted, that are accruing abroad, what if they're more than £2,000? What happens then? Well, then you have to actually claim it. Okay, you have to actually claim the remittance basis of taxation. Bear in mind also here, of course, this is only available to those individuals that are non-domiciled, and the rules on what constitutes tax domicile, as it were, the deemed domicile status have changed quite a bit, which I'll look at in just a minute. Not that long ago, actually. So basically, non-doms who have been resident here for not more than 7 years, so up to 7 years, you can claim, you have to claim it, you can claim the remittance basis of taxation for your gains and income, even if they exceed £2,000. You can claim it and you don't have to pay anything for it. You lose your personal allowance and use your CGT exemption, but you don't have to make any further payment. Now, if you're a longer term resident and you've been resident here for at least 7 of the previous 9 tax years, then you can claim the remittance basis. You will lose your personal allowance, you will lose your CGT exemption, and you also have to pay £30,000 a year. So the benefit of not remitting those gains, the tax benefit of not remitting those gains and that income, has to be quite significant to justify the payment of an extra £30,000. And if you've been resident here for at least 12 of the previous 14 years, then that price goes up to £60,000. So that's something to carefully consider. And then there's that point I mentioned earlier around just who is a non-domiciliary. Well, someone who is maybe physically present here, because we're only talking about individuals that are resident here, but someone who's physically present here and has a permanent intention to reside here, where their original domicile wasn't here. So their domicile of origin wasn't the UK, but they are now here, resident here, and it's a very subjective test, but have a permanent intention to reside here. Oh, okay, so that means you could get off being determined domicile under the general law for quite a while, because you don't have a permanent intention to reside here, and you do a number of things that shows and that gives evidence that you don't have that permanent intention. However, the law steps in and says, however, if you were born in the UK with a UK domicile of origin and you're resident here for any year, for 2017 and 18 onwards, so any 1 year you're resident here, if you had a UK domicile of origin, you will be treated as domiciled in the UK, and then you can't access the remittance basis. Okay, that's the other test, is that, okay, you didn't have a UK domicile of origin here, but you've been resident here for at least 15 of the last 20 years, immediately preceding the relevant tax year that we're talking about. You will also be deemed domiciled here in that case. And so if either of those two tests apply, then you will not be able to access the remittance basis. And that's what I wanted to say about that. So basically, it is quite a powerful and valuable tax relaxation to be able to claim the remittance basis. The price is quite high once you've lived here for more than 7 years, been resident here. But if you've got quite significant offshore income and gains, it could still be very, very worthwhile. And we will have to watch this space to see what Labour, should they be elected, do about that.